Hello friends, bonjour. Welcome to the final part of the RRSP video. Today we will study in detail about what happens to an RRSP on the death of a plan holder or an annuitant. What happens to an RRSP when the plan holder dies? Generally, the fair market value of all the RRSPs at the date of death is included in the net income of the deceased in the year of death, unless paid to a qualified beneficiary. Now let's see who is a qualified beneficiary. 1. A legal spouse or a common law partner of the plan holder. 2. A minor child or grandchild financially dependent on the deceased. 3. A physically or mentally infirm child or grandchild financially dependent on the deceased. A qualified beneficiary may not include a divorced spouse, but may include a separated spouse. It is possible to have two beneficiary spouses, a separated legal spouse and a common law spouse. Now let's see who is a financially dependent person. A person whose income in the preceding year is less than the basic personal amount. That's $16,129 in 2025. Now let's see what's refund of premiums. Canada Revenue Agency defines the refund of premiums as a payment that is paid or deemed to have been paid from a deceased annuitant's RRSP to a qualified survivor. Just for you to know, if the value of an RRSP or RRIF decreases between the date of the holder's death and the date the assets are distributed to the beneficiary, a deduction of the offsetting amount can be claimed in the deceased's final tax return. This offsetting amount is calculated by subtracting the amount distributed to the beneficiary from the fair market value at the time of death. The distribution must be distributed to the beneficiary before the end of the year following the year of death. Now let's see an example to clearly understand how the RRSP fund gets distributed to different qualified beneficiaries. So here in our example, let's assume a person named Smith passed away in May 2025. He is survived by his wife Lucy and his three sons. The youngest son, Tom, is 10 years old. Then is the 21-year-old physically infirmed son, Gary. And finally, the 25-year-old Frank. Now let's see the first case. What would happen if Smith had named Lucy as a beneficiary in his RRSP? Smith's RRSP gets deregistered and the fair market value of all the funds in Smith's RRSP gets directly transferred or rolled over to Lucy's own RRSP, RRIF, or is used to buy an annuity. No immediate tax consequences here. Also, Lucy can claim a deduction for the transferred amount on her income tax return. Taxation occurs only upon withdrawal. Okay, now let's see the case 2. If Smith had named Tom as a beneficiary in his RRSP, then what would happen? We know that Tom is a 10-year-old non-infirm, financially dependent child. So what happens? The funds from Smith's RRSP are used to purchase an annuity for Tom and the deduction can be claimed. The annuity must be a fixed term to age 18. The payments as received by Tom are taxable in his hands. A trust under which the child or grandchild is the sole beneficiary of the annuity payment may also purchase such an annuity. Now let's see the third case. What would happen if Smith had named Gary as a beneficiary in his RRSP? Gary, as we know, is a 21-year-old physically infirmed, financially dependent adult whose previous year's net income is lesser than the basic personal amount. So now what happens? We have two options. Smith's RRSP proceeds can get rolled over to 1. Gary's RDSP, that's Registered Disability Savings Plan, up to the lifetime contribution limit of $200,000 and no immediate taxation occurs. 2. Gary's own RRSP or RRIF. Okay, now let's see the case 4. If Smith had named Frank as a beneficiary in his RRSP, what would be the outcome? Frank is a 25-year-old financially independent adult. So what happens? Smith's RRSP proceeds can't be transferred to a tax-deferred plan of a non-infirm, financially independent adult or grandchild. Therefore, no tax deferral is possible. The only tax advantage available is the ability to shift taxable income from the deceased to that of the beneficiary. The advantage is that it may be taxed at a lower marginal rate. Okay, so now let's see the case 5. What would happen if Smith had not named a beneficiary in his RRSP? So now the RRSP funds become part of the estate. The fair market value of the RRSP proceeds are included in the final income tax return, taxed at the estate's rate. And the final case, case 6, if Smith had named Lucy as a successor annuitant to his RRIF, then what would happen? Smith's RRIF account would remain intact as before, with Lucy becoming the new annuitant. That's Lucy takes ownership of Smith's RRIF account in its entirety. So now let's see another example. Susie, age 10, has been financially dependent on her grandmother, Mary, since Susie's parents died in an accident when she was 2 years old. Mary recently passed away at age 78. She named Susie as beneficiary of her RRIF, worth $400,000. So what options does Susie or her guardian have with respect to Mary's RRIF? Susie has been financially dependent on Mary, but she is not physically or mentally infirm. She can therefore use the RRIF proceeds of $400,000 to purchase a term annuity to age 18. Susie will most likely receive annuity payments on a monthly basis, and the income will be taxable in her hands. Therefore, the $400,000 in her RRIF proceeds will not face immediate taxation at a very high marginal rate in Mary's terminal return. Instead, the payments received by Susie from the annuity will be taxable annually at a much lower income tax rate.